Hey everyone, welcome back to another episode of Wallet Wisdom, a podcast presented by Lake Michigan Credit Union. If you're new to the podcast or have been listening for a while now, Wallet Wisdom is designed around breaking down the ins and outs of financial aspects, as well as bring and help answer some of banking's more confusing or complex questions. I'm one of your hosts, Brett. As always, sharing the mic with me, my co-host, partner in crime, Lo. How you doing?
Very good. Ready for some crime.
I know, right? I'm like, ready for crime?
Right, crime. What is the crime today? It's early in the morning. We never film or record this early.
It
right?
is.
So
I've got my coffee. I'm feeling not caffeinated enough. So if we get a little zany.
we're lucky you're upright and breathing. So this is great.
That's exactly right. That's exactly right. Well, hey, as we often say, and it's no different today, we have an incredible episode for you. Joining us in the studio, we are excited to welcome fellow MSU fan and leader of all things mortgage at LMCU, Senior Vice President of Mortgage, Eric Burgoon. Welcome.
Go green.
Go green. Go white.
Oh, man,
that's right.
I am not in good company
No,
today.
well, I think you are in good company, but that's a matter of opinion.
Good company that makes bad choices. I get it. I get it.
As you've probably picked up, we have been talking about mortgages a lot over the course of 2022, 2021. It's just been crazy in the mortgage world.
Well, when the pandemic hit, rates dropped dramatically, and our teams have been working overtime upon overtime and overtime. We closed well over $5 billion each of the last 2 years, 2020, 2021.
Man.
And it's been just a go, go, go. And the thing that's been different is that not only rates are low for refinancing, but the housing market has been booming too. People buying, building.
Yeah.
It's been crazy.
Buying sight unseen, cash in hand, right? Like all
Crazy
these
stories.
waiving inspections. And
Well, and we've had, Meg Dunn on our show as well as Lisa DeLass was on the show as well. And, many of the comments they said that during that season, and it's still happening, is almost like drinking out of a fire hose. It's just coming so fast that you just got to keep up, and they just keep hammering it out. It's amazing what they've been doing.
Yeah, we just tried to keep up for our members. Everybody wanted to refinance, and we got through it.
Yeah,
but things have changed now, right? The last 2 months, rates have made a reversal and have gone up, more than 2%, pretty quickly.
And I guess for me, and maybe I'm sure for some listeners as well, what does that really equate to? I mean, I hear a couple points in that, and it's like, well, that doesn't seem like it would be a ton, but how can that really, even 2 points, start to affect the overall market and the way that, consumers are interacting with mortgage products and how they can, find a mortgage, more readily?
Yeah, well, ultimately, if the interest rate is higher, your payment's going to be a little bit higher, right?
Mm-hmm.
Now, mortgage rates are still historically low. Under 6% on a 30-year fixed. When rates, in the 80s and 90s, we're much higher than that.
Yeah.
So they started coming down. So rates have really been on a trend down for almost 40 years.
yeah, I think my parents' first house was at a 16% or something like that. And I was like, wait,
Right.
what?
Yeah.
I don't know if I know any rates like that. Maybe deposit rates somewhere. I don't know, but like,
It's weird to
goodness
think
gracious.
that, because I remember that was more of a normal kind of interest rate, and it's weird to think about that now. Like, I would never in a million years want to spend 10 or 12% on a mortgage, and it's like that was reality not even that long ago. So
Right. So I think one thing to keep in mind is rates still are pretty good.
Mm-hmm.
Even though they've moved up a little bit, and that kind of choked off most of the refinancing activity.
Yeah.
Rates are still pretty good. Still a pretty good time to buy a house.
Perspective is everything,
It
for
is.
sure. And so we've seen it fluctuate. How much does it typically fluctuate? Is it daily? Is it monthly? What does that timing look like?
Yeah, mortgage interest rates are really based on long-term expectations. So they are a market-driven rate. So they change at least daily. Oftentimes we have a midday pricing. So rates move very frequently. It's a market-driven rate, and so we can see rates up a little bit in the morning and back down in the afternoon.
No kidding.
Wow.
That's crazy. So when you think about interest rates like that, what can maybe listeners and potential buyers out there kind of consider when is a good time, when's a bad time? Like, should you be thinking about is the rates are going up a little? Are they going to dip back down? What kind of is a decision-making process that someone could be thinking as they're going through considering mortgage?
Yeah, good question. I mean, it's it's difficult to time a market, right? It's difficult to time a purchase in a stock market. Same thing with interest rates. Now, there's a few things that you can watch. Mortgage rates typically follow about the 10-year Treasury rate. So if you're looking for a rate that anticipates, that's a longer-term rate that aligns pretty closely with the 30-year fixed mortgage rate. So that's one thing to watch. The other big factors right now, especially in the marketplace, recession and inflation. So if you think recession is kind of the prevailing topic, that's going to drive rates lower. So if there's a recession, rates need to come down. Inflation, the opposite. So inflation goes wild, that's going to generally drive rates upwards. And those two factors right now are kind of fighting with each other.
They are. I was going to say,
battle to the death.
I think for all listeners, especially here in the U.S., there's a lot of conversation of recession and inflation, and to hear that's really interesting. It's a bit of a tug of war. It sounds like.
It is. Absolutely. Yeah.
Oh man, that's fascinating. So, when the Fed does decide and when they do raise those rates, how does that kind of trickle down into these areas like of mortgages and how people can get a better loan rate, or maybe it's gone back up? What does that impact?
Well, there are different rates. So if the Fed funds rate's a rate that the central bank sets for lending between banks. So it's gone up 75 basis points, 3/4 of a point, a couple of times here recently. And so watching that is important, but it's not directly tied to mortgage rates because, again, mortgage rate is a long-term rate that's more based on expectations. So oftentimes what you'll see is that when there's an expected Fed increase of even 3/4 of a point, the market builds that in already. So if it ends up being a little bit less, still up, but it's a little bit less than was expected, mortgage rates actually might rally and come down.
No kidding.
So it can vary.
Yeah. And now that those rates, those affect all different types of mortgage products, from whether it's a traditional buying a mortgage for the first time as a first-time home buyer, or does that also then affect interest rates for if I'm looking to refinance, or I'm looking to do like a home equity line of credit, or there's other mortgage products that I don't think we talk a lot about either, which are like advantages of like an ARM, that adjustable rate mortgage. What kind of strategies, I guess, for listeners can be thinking about now that rates are kind of in that little limbo?
Yeah. Well, you got about 6 questions in there, right?
I did. That's the professional.
Well, maybe we'll start with this one. So mortgage rates, refinance or new purchase or new construction are all kind of tied to the longer term mortgage rates that we've been talking about. Now, home equity loans, consumer loans, auto loans are a little more stable and more slowly moving. So those are adjusted, more monthly as opposed to daily. So a little bit different each of those products, and those products can be. We're seeing a big influx of home equity lending right now, right? Because those people that have a pretty low fixed rate mortgage and want to do some home improvements to their house or whatever, that's a good way to get money out too. So a mortgage related product, not technically a first mortgage product. But the big trend that we've seen lately, and it happened pretty quickly when the rates, shot up a couple of percent, big movement now to what are called adjustable rate mortgages, which we hadn't seen much of in the last few years. When rates are so low, people are locking into a 30-year fixed or a 15-year fixed and trying to pay that off early. But now adjustable rate mortgages are 65% of the new applications that we're seeing. So pretty quick trend.
Wow, that is a huge trend. I guess for me and maybe for listeners as well, what are, I guess, advantages of that? I've heard of ARMs, I have two of them myself, but, I've heard of these, adjustable rates, rate mortgages. I guess, what are some of those advantages that we can be considering?
Well, the first big advantage is it's a lower rate.
Sure.
Right? So if you wanted to, be in the 3 or 4% rate, and that fixed rate market has moved up to closer to 6%, you can still get a 4% adjustable rate. And there are different ARM rates. So the way that really works is there are different terms. So we have what we call a 3-year ARM, a 5-year ARM, a 7-year ARM, a 10-year ARM. And what that really means is that the interest rate is fixed for that first initial period. So for example, a 7-year ARM, the rate that you have will be fixed for 7 years. So if you think you may move in 7 years, you may even refinance in 7 years, it can be a pretty good sustaining. So you build up substantial savings in that 7 year period of time before the rate can even adjust at all. And then even if it does adjust upward, you've got a lot of money in the bank, and you can pay for a higher interest rate at that point.
And it sounds like too, with the way that it's set up, they're not like your traditional thought of like a 15 or a 30-year mortgage. It sounds like it's on a little bit more of that accelerated, almost like you're trying to pay that either off quicker, or like you said, hey, I'm not going to stay here for 15 or 30 years. I'm planning on staying here for maybe 5 to 7 years. This is a product that can maybe be beneficial for them.
Yeah, it makes the payment lower. So we do amortize the ARM products over 30 years. So so the payment is low because the interest rate is low, and it's a 30-year amortization. So that helps too. So somebody looking for a lower payment, that's the way to go.
Wow.
And in layman's terms, amortization is
how fast the loan the last
divvying it up between months,
between principal and interest, and sort of working your way down from 0 to 30
So
years.
with the ARM, it's fixed, we'll say 7 years, like you said. What happens after that 7 years then?
After 7 years, we take a look at what is the index. So we use a treasury-based index. We were talking about the 10-year treasury loan before. So we look at that index for what that is, and then there's a margin that you're assigned at the beginning.
Okay.
2.5% is pretty typical. 2.75%. So you take that index, whatever that is at that time, add the margin to it. Okay. And then that becomes your new interest rate. Now it's typically capped. There's a cap so the adjustments can't be all at one time.
And that's federally mandated, correct?
It's a federal interest. The interest rate, the index is all federally controlled.
Yeah.
Awesome. So when we talk about the Fed, they send a plethora of these indexes, kind of. So I know consumer stuff is based off of prime, right? Yep. What is the mortgage term? Is it just the index? Is that what we call it? Or
well, the comparable mortgage rate is for us at Lake Michigan Credit Union is the treasury based index. And you can look that up at Bank Rate Monitor, probably even on our website.
Awesome. We have so much awesome stuff.
What those rates are. They're produced the market every day.
Yeah. So that's fantastic. I mean, it sounds like a really great way for for listeners to take advantage of still keeping a lower interest rate while maintaining, the ability to pay it off as you go. Or, hey, like you said, I'm moving to a different state in about 7 years. We got plans. I'm moving, or I'm buying a tiny house and I'm touring America.
Well, and I think people in, the millennial generation are a lot of times buying a house for a short term because they're going to make it more beautiful and they're going to flip it. And, that's probably a great option to come in and
absolutely see that a lot.
Yeah.
And again, back to what we talked about at the beginning, a 30-year fixed rate mortgage most closely follows the 10-year treasury rate.
Sure.
And that's because that's the duration of that loan. That's typically how long a 30-year mortgage will last. On average, it's less than 10 years.
No kidding.
It's because things happen, right? People move, they get new jobs, they decide they want
bigger
a different
family.
house, whatever.
Yeah.
So the chance of anybody having the same mortgage for 30 years is really not likely.
Absolutely. Or at least they'll refinance within those 30 years, right?
Exactly.
So it's not even...
It's not, you don't even have to move. You're right. It's definitely right. If you refinance, that's a new mortgage at whatever that rate is at that time. So
sometimes that really isn't a bad thing that, people don't hang on to a 30-year mortgage for the full duration, because to be honest with you, like we've been talking about, over 30 years, I mean, you look at the past 30 years, the rates have changed so much, and there are so many great products. There are new products that come out in ways that, we can help people get to the end of their loan faster. And so it's like, if you're in a 30-year and you're like, I've got 10 years left and it's the original, well, there's some other ways that you might be able to pay that off a lot quicker and not have to do 10 more years of what you've got.
Refinancing into a 10-year ARM at that point, right? Looking at it and saying, I can get a lower rate.
Yeah.
I know I'm only going to be here 10 years and now,
That's
or
right.
new house, first house. We just moved from our first house.
Yeah.
We lived there for 10 years, like on the nose.
Yeah.
And so it became one of those things. Why didn't we look into that? Because I had no clue. I have worked here for 10 years, so I've gained knowledge that long.
Yeah.
But I just wish someone would come along like Eric and come onto a show like this and say that, because
For sure.
I had no idea.
Well, and I think we were chatting just before we started recording, Eric, is growing up, I've heard about ARMs, and I often will say I hadn't heard of them talked in a very positive light. And understanding them is, I think, what listeners, I mean, if in case maybe you're in the same boat as me, where you were thinking the same thing, like, oh, I've heard those are horrible and don't do it, is honestly, I didn't know. And hearing what you're talking about, it makes a lot of sense. And so I think there's actually more opportunities for listeners that it fits into their dynamic.
Absolutely. And I think working with your LMC loan officer is the best way to do it. They can advise you. They can run scenarios for you. Tell you which way works. Works best for you, because you never know exactly what the future holds, but you are getting a much better deal rate payment with an ARM to compensate you for that potential risk of rates going up. But you could very easily see that, maybe that we were talking earlier about the inflation recession battle. If a recession kind of wins out on that, you may see interest rates come back down, and you could refinance into a 15 or 30-year fixed if you wanted to.
Yeah.
Who knows in a year or two. So
That's so true.
Right. I think people oftentimes look at that and think variable rate, which is very, very different, right? So we're fixed for the first part of this loan versus variable rate. It's just going to flux whenever prime fluxes, right? And so I think that's probably the common misconception, is that there's no term that it's fixed.
Nope. You know exactly what you're getting for how long.
Yeah.
And the only variable is really what is that index at the time that adjusts.
After that elapses. Yeah. So if I'm coming in to do a mortgage, what 3 things should I keep in mind when trying to decide what product to choose?
I mean, I think the first and probably most important is your time horizon. How long are you going to be in this home or in this mortgage? The second is really to make sure you've got your financial situation in order. You've got you've got good credit, you got good explanations, good history, job history. That'll make the process go much more smoothly. And number 3, I think, tell us about your house.
Yeah.
It's like it's fun, right?
Yeah.
We always think of the mortgage and is the negative part of the excitement of buying a house. Our people want to know, why'd you pick that house? What are you doing with it? Why you're fixing it up? Why you're building? And
what room made you fall in love?
Right.
That's right.
I mean, it should be fun. It shouldn't be a grind. We'll take care of the financing. We'll figure all that out, and we've always been competitive and make sure that works. But share a little bit about what's your personal situation and what you're doing.
I love that. And throw number 4 in, have pizza on the floor your first night in the house.
Oh, that's
right.
awesome.
I feel like that is just a rite of passage.
That's right. That's right. No table.
Paper plates.
All sweaty, exasted.
Exactly.
And,
Maybe some champagne out of paper cups. I don't know. The bathroom cup.
The bathroom.
yeah, we've all done that.
Yeah,
exactly. It's a rite of passage.
Well, and I think, what you just were saying too, Eric, is spot on when we talk about on the podcast frequently about the partnership that we really strive for at LMCU with all of our members. So when you come in, whether you're a member or not, I mean, sometimes, I'll be honest, members become members from their mortgage, and then they look
100%.
at, how do I move my finances all under one roof? And hey, wherever and however your point of entry is to getting to know us at LMCU, I think over that period of time, you're going to find we want to be your partners in that. We want to help you and your family and get you to where you want to be financially. And it's our passion, so I get a chance to work with a lot of our different loan officers, whether it's taking photos or working with them out in the field, and they're just so passionate about wanting to help people.
Every single one of them.
It's
absolutely
so cool.
Yeah, very confident. They're the best in the business for sure.
Yeah, and definitely. I love that they also sometimes get to see them come back, right? So it's been 15 years or whatever of their 30, and now they're coming back to refinance or buy their next step of the house, and I'm sure that just has to be such a treat.
Yeah, no better compliment than to have one of your past clients have their son or daughter or friend,
that's huge.
Come back themselves. That's really where most of our business at this point comes from is members telling members, and and family members.
Mm-hmm. That has to be a pretty fun experience if you help to, get a young family or, just a family that's still early in that process as their kids are still young. And then, fast forward 15 years or 10 years, whenever, and they're looking to buy a house, their own kid. And it's just like, whoa, this is so cool how, I've been in that journey with them, not just this couple, but now their kids as well. So, oh, that's so fun. That's awesome. So, as listeners are thinking about the continuing rate environment and as it, relates to the remaining of this year and into next, like you said, we can't really predict the future. We're not, mind readers, but we do at least have some, some good facts to go off of that can really help us, in predicting a little bit of what we can do. And so Eric, I appreciate you bringing some great suggestions. And again, for listeners, check us out online or stop into a branch, and, ask to, sit down and talk to a mortgage specialist about our adjustable rate mortgages. And again, that's one of many products that we have. That's the thing that still amazes me is how many different, mortgage options are available that you and your team have developed and created, from doctor loans to, arms.
New construction too. We talk about that. That's a huge piece, but there isn't really a product that we don't have. So.
And that's why it's so important and so awesome that we hire people that are willing to sit down and listen to the story and kind of point you in a direction that makes sense for them. And, you're not coming in here and getting what's best for us, because really what's best for us is to have a relationship with you. And so I love that is our priority, to hear their story and match it with a product that fills their need. So
absolutely.
Good on your team.
Absolutely. So, well, Eric, again, we are so grateful that you're able to be on the show with us today and share some of that awesome knowledge. And thanks for letting us, have some of your staff on the show as well and sharing all their wisdom as well. So we'll have to have you on again.
They're what makes us great.
That's
sure.
it.
Yeah.
That's right. And again, as rates and anything like that changes, listeners, we always want to keep making sure we're bringing you guys the most up to date as possible. And obviously things change. So maybe by the time that they listen to this in a month or whenever, it's just like, that doesn't even relate anymore. But that's just the nature of podcasting. And we hope, though, that at least the information will be helpful. So.
Yes.
Well, Eric, before we let you run off, we do want to kind of move over to a part of the show that we like to call Are You Smarter Than the Show Trivia? And it gives you the opportunity to win some money for a nonprofit that LMCU supports. Each podcast, we have $50 on the table, but don't worry. If you don't win, that $50 will be added to the pot for the next episode. So no matter what, somebody wins and nobody loses. Well, maybe some bruised ego, but the rules are simple.
Try to win.
Yeah, right.
The rules are really simple. I'll read you both a question. You'll buzz in with your name. That's your buzzer. And you'll have a chance to answer. If you get it wrong, then that other person has a chance to steal the point. And then whoever gets the most points after 3 questions wins. So let's get to it.
Oh, man. You forgot to introduce me as reigning champion.
Oh, sorry.
So
I got you. Ladies and gentlemen, the reigning champion of the Wallet Wisdom Are You Smarter Than the Show podcast trivia. Low.
Listeners, if you were not wearing headphones for that, please rewind, put headphones on, and listen.
Sunday. Oh, man. Well, as you can tell, we are starting to caffeinate now, and I think we're
kicking in.
It's kicking in. So, all right. Well, let's just jump right into the first question. All right. What was the first soft drink in space?
Low.
Ooh.
I'm just going to go with a classic, and Coca-Cola.
Coca-Cola is correct. It is. It was the first.
I feel like they're the reigning champion.
Yeah.
Tang's not a soft drink?
Oh, man.
I think Tang's pretty good. But
It has a nice soft flavor.
Can I appeal the question?
Can I appeal the question?
Right.
Well, we'll appeal NASA if you'd like. No, I'm just kidding.
Maybe it should have said carbonated soft drink.
Oh, yeah.
So far it's a tie then.
I like that. That's good.
I like your style.
Oh, man. All right. Question number 2. In the state of Georgia, it's illegal to eat what with a fork? I had fun, listeners.
Illegal?
Yeah, illegal. I had fun picking these trivia questions.
Low.
Swing low.
I am swinging low right now. A peach. Because Georgia peaches.
Oh, that's true. That is true, but it's wrong.
Yeah, I figured.
I'm going to say barbecue.
Ah.
Okay. You know what? I'm going to give that to you.
Well, I don't
Fried
even-
chicken, technically, but barbecue, you could say fried chicken's in the barbecue mix. It's a stretch, but I'm letting it slide.
Yeah,
It's
I don't
all
know.
for a
I don't know
good
how I
cause.
feel about that.
It's
But we'll see how this next one
We'll
goes.
take that back. No, I'm just kidding.
It's okay. Joe Bat only got one right because Matt Cook answered it for him.
Shout out to
so.
Joe. That's another diss on
Love you,
a whole nother episode. So it doesn't end. No, we love you, Joe.
Listen to a couple episodes ago.
So yeah, weird, right? Georgia's it says it's illegal to eat fried chicken with a fork. So if there's any listeners in Georgia right now, let us know if any of you have been accidentally arrested for
I
eating
wonder how often it's
fried chicken with a
enforced.
fork.
Yeah. I kind of want to go there and eat chicken with a fork just to see what happens.
I'm gonna guess it's probably a public trial, not so much, actual established
Shamed.
law. Yeah, exactly.
Get put on a stage and everyone boos at you.
Okay, well, hey, question number 3.
It's a tie.
It's a tie. We do have a tiebreaker question, but talking about homes, mortgages, purchasing houses, all that fun stuff. What is the most expensive home in the world?
Are we asking how much it is or what the home is? Who owns it?
Yeah, well, not who, but what is the most expensive home in the world?
Low.
Low.
I went there. I'm going to say the Biltmore.
No,
Okay.
sorry.
It's a really pretty home.
Is it? I
Mhm.
bet.
It's like 800 acres.
Wow.
Yeah.
Yeah, I went there too.
It's beautiful,
Yeah,
isn't
there's
it?
a lot of them right around there
Yeah.
too, but in the world.
Mm.
Oh, yeah, the world.
How about like Versailles?
Ooh.
I don't know if anybody lives there anymore, but
Unfortunately, it is not. This home is guarded by
Oh.
guards in
It's-
red and
It's
with big
the-
hats.
It's the
Buckingham Palace?
Buckingham Palace.
How much is it
Yeah.
worth, you know?
It did not say. It, so we can
isn't
make
that
that up.
kind of just as close as chicken is to ribs? As Versailles to, so that's 2 then, right?
Yeah, I think you're right.
They're both castles, right?
That's right. It's
The
close.
French and the British sometimes get together.
Oh, my word.
I love it. All right. Well, still tied. Tiebreaker question. Someone's going to win.
See how it's tied. I think I already lost, but very nice of you.
Well, we'll see.
All
We'll
right.
see.
$1.6 billion.
$1.6
billion.
Billion with a
With a B.
Wow.
But if it's not for sale, like
Yeah, it's not really.
Do we do mortgages for 1.6 billion? I'm just asking.
Not yet. It's going up. But
Looking to
not
purchase
yet.
the Buckingham Palace. All right. Last question. All right. I'll be honest, I kind of wrote it for you, Eric.
Oh,
But
even more pressure.
But it's okay. I'll just read it off loud. You don't have to.
He can cut that part out if you don't get it right.
Fed's funds rate.
Yes. No. This is actually not a question that you have to buzz in for. This is our tiebreaker question, which will be closest to wins. I know that worked really well the last few times, and so I'm adopting
Yeah,
it. as
I
the
like
thing,
it.
So,
I like it.
but yeah, speaking of adoption, so what year was the name Michigan State University adopted in? Closest wins. And Lo, I know you're a huge fan.
It's in my genes, man.
That's right. So yeah, what year was the name Michigan State University adopted in?
Guests get to answer
You want me to
first.
go first?
Yeah.
Oh. The university,
strategy,
not the
Eric, I
beginning.
wouldn't do
So,
it.
no, I know. I'm going to say 1955.
Okay.
And I'm going to go with our founding year, 1933.
Okay. So
Time for math.
a couple podcasts ago, we asked the question, what year was Harvard established in?
Didn't I
And
get it on the nose or something?
No.
Oh.
No, none of you were close.
Oh, right.
It was like 1600s
But
or
I was
something
closer
crazy.
because I went lower.
Yes, exactly. Unfortunately, today, going lower was not the right choice.
Oh, man.
So it was actually adopted in 1964.
Wow.
And so, Eric, you're closer with the
It
1955.
was a little tricky because it's found in a certain time, but then
Exactly.
it was different names.
Just like
I had
us,
to
right?
I had to give a little trick on that. That's for
Right.
sure. Because you're right. It was originally an agricultural college, and then eventually was adopted and made a university as well. It's actually pretty fascinating as I read more about it. Just the history of.
I need to brush up on MSU stuff, apparently.
No.
It's true. They were the
Yeah.
first of a lot of things in how they did things. Anyways,
They were the team that beat you last year.
What is life without
That's
a little
right.
bit of rivalry? Am I right?
that's right. Well, hey, Eric, congratulations
All right.
for winning today.
Ooh, I'm off the hot seat next
I
episode.
know, right? Now it's so the way that it works. Now that Lo has unfortunately been dethroned, it moves to me for the next podcast to now be up against our.
I've
Nice.
warmed up the seat
Congratulations.
really well for you.
I appreciate it.
Yeah.
I appreciate it. Again, listeners, so many different nonprofits that we support in our communities, and it'll be a nice little check for them to get for a nonprofit. So
Yes.
that's awesome. Well, Eric, again, thank you so much for being on the show and just participating. Thanks for beating Lo today. It's
He enjoys
she's,
it entirely
she's my
too
best
much.
friend, but I'll
Right.
tell you,
Really? And
it's
I just
fun to
met
see her,
her for the first time
Right?
today. So,
Yeah. Went easy.
officially. Yeah. It was
You're
fun.
welcome back anytime.
Yes, anytime. Well, anyway, again, listeners, thank you so much for listening and tuning in. As always, Wallet Wisdom is, again, designed for you. So we want to hear from you. So be sure to like us, subscribe. We're on all your social platforms.
Yeah, give us a shout out. Give us a comment.
That's right. We're LinkedIn, Instagram, Twitter. We're on the Facebook.
Spotify.
Just drop the.
iHeartRadio.
That's right. Amazon.
You could even Google us.
You could Google us. We're Googleable. Is that a
Googleable?
Is it a verb now? Googleable?
Yeah, it is now.
I guess so.
Ka-chink, I
Well,
approve.
I think we're going to need to go get some more caffeine. Listeners, have a great
I
rest
don't
of your
know.
day.
Bye.
Thank you.
Thanks for listening. The information provided in this podcast by Lake Michigan Credit Union is general education or marketing in nature and is not intended to be accounting, legal, tax, investment, financial, or other advice. Statements of individuals are their own, not LMCU's. All topics discussed are information of a general nature and do not address the circumstances of any particular individual or entity. Consult an appropriate professional concerning your specific situation. As of the date of publishing and any future date this podcast is broadcast, all rates, fees, payments, or other specific figures discussed are subject to change and are dependent upon your specific financial situation. All loan products discussed are subject to credit and collateral approval. You alone assume the sole responsibility of evaluating the merits and risks associated with the use of any information or other content in the podcast before making any decisions based on such information or other content. In exchange for listening to the podcast, you agree not to hold LMCU, its affiliates, or any third-party service providers liable for any possible claim for damages arising from any decision you make based on information or other content made available to you through the podcast. For more information on any of the content discussed in this podcast, please visit lmcu.org. Copyright Lake Michigan Credit Union, federally insured by NCUA. Equal housing lender. LMCU, NMLS ID number 442967.